welcome. I'm so excited today to get to introduce one of my longtime partners, Tom Thi, who is in none other than the insurance space. Welcome, Tom.
Hey, Becky. Thank you. Thank you for having me.
Well, it's super exciting to get the opportunity to chat with you. And we were chatting before how awesome it
Yes.
is that we get to actually see each other in person. We've been on the
Right.
phone for the last
Yes.
couple of years doing
Oh, yeah.
business.
It's always emails, phone calls, text messages, and stuff like that. So it's great to see each other in person
That's
like
the
this.
biz though, right? It's all
Yeah,
like
yeah,
calls,
sure.
emails,
Sure.
texts, and
Yep.
it's really
Yep.
cool to get to like actually talk face to face or
Oh, yeah.
computer screen to computer screen about this
Exactly.
environment that's going on. So tell me a little
Uh,
bit first about you and your
sure.
business and just give me a high level.
Okay. Yeah, yeah, no problem. I started my agency 2020, right before the pandemic. So my agency's T Mentor and Associates here in San Diego, right smack in the middle of Mission Valley. So I've been in the insurance world for about 26 years. I've lost count after 26,
Oh my
but around
gosh.
26 years or so now. But we specialize in property and casualty insurance, which is homeowners, auto, umbrella policies, and commercial type policies and stuff like that. So we have a office staff here that's ready to help.
Awesome. And
Yeah.
insurance is one of those things that is so unsexy, but it's so necessary. And I say that because
Right.
I was in insurance. I'm licensed health and life, just like
Yeah.
you
Right.
know, and I'm
Hmm.
still licensed,
Yep.
but it's one
Yep.
of the most kind of uh, I wouldn't say undervalued, but like you don't,
Right.
as a buyer or seller, you don't really consider the
Yeah.
importance of insurance. And
Correct.
now it's
Right.
become a topic splashed all over the news.
It has, it has, it has. Yeah, it's one of those things where it's kind of like an afterthought, right? When you're purchasing at home and stuff, it's like, oh yeah, just the insurance, and then you just add it to the closing costs, and it's there and it's done, right? But
Right.
nowadays, especially in California, right now, it's really difficult just with all the carriers leaving California, where if we're talking about a year ago. I would have over a dozen carriers that I could shop it out with. I'm down to about three or four right now, so
Oh my
that's how bad it's
gosh.
gotten here in California. Yeah.
Who are those carriers, by the way?
Um, so right now, we have a couple of smaller carriers. We have Safeco, which is a
Hmm.
Liberty Mutual company. We have a company called Bamboo, who's a subsidiary of Nationwide. We have a company called Aegis.
Hmm.
Foremost is still writing a few policies here and there. And then, of course, the last resort here in California is a California Fair Plan.
Right,
So
exactly.
those five. And then outside of my brokerage world, there's still a handful of companies out there. Maybe it's a AAA, a Mercury that still might be writing a
Hmm.
little bit of business, but they still have a cap on kind of what they're doing right now on a month-to-month
Yeah.
basis.
So you said it earlier that it's a lot of the times historically, really, it's been an afterthought in the purchase where
Right.
people who are getting a mortgage, they
Correct.
have to have this policy
Right.
because
Right.
lenders are not going to lend if you don't have
Correct.
your homeowner's insurance, which makes a ton of sense.
Yep. Yep.
And now all these carriers are leaving the
Yeah.
state, and not just
Right.
California, but a lot of other states that have these high natural
Correct.
disasters,
Yes.
Washington, a
Exists.
lot of
Yeah.
other
Yep.
places.
Hmm.
Insurance is not profitable. It seems like it's not as profitable anymore for these
Right.
companies. Tell me a little
Well,
more about
well,
what are their
well,
actuaries,
yeah,
what are they
and
doing
so
back there?
for here in California, for example, what we deal a lot with are fires, right? So we get these fires
Mhm.
every single year, or at least it seems like it's almost every single year. So that's where the insurance companies take a majority of their losses is due these fires. And with the way inflation is, with the cost of materials, the time that it's going to take to rebuild and stuff, they're actually losing money right now in California due to all of
Right.
that. And what kind of put a hamper on all of this was back in 2020, California, because of COVID, from 2020 to the end of 2022, they put a moratorium with all the insurance carriers where they couldn't increase any premiums. And so that kind of put a halt on what they could do on a year-to-year basis, because usually every single year the insurance companies will look at it and they might increase their rates within 6%, 7% or so, but then when you go through a 3-year time frame of not being able to increase any premiums, and when that thing opened back up again in 2023, now they're like 4 years behind, and so they're going based off of old rates, taking on huge losses in that 4-year time frame. And that's kind of created this weird market right now where it's not profitable for the insurance carriers, and that's the reason why they're leaving until things change in California. Yeah.
Yes, and I never knew that actually, like from
Hmm.
the changes in, the moratorium on
Right.
increasing rates and
Yeah.
all of
Right.
that is starting to catch up to us right now. So
Correct. Correct.
again,
Yep.
no such thing as a free lunch. We're having to
Right.
pay for it at one time or another. And
Right.
this is
Correct.
the
Correct.
environment
Yeah.
right now.
Yeah.
So
Yeah.
tell me, oh, go ahead. Go ahead.
Oh, no, no, no. Yeah. Go for it, Becky.
A question that I have that
Hmm.
comes up a lot because I obviously work with buyers, I work with
Yeah.
sellers. It's affecting both buyers and sellers. Sellers are having a hard time
Hmm.
sometimes selling their homes if it's
Right.
uninsurable, and
Correct.
so if
Correct.
they've had claims on their
Yep.
property. That's one thing that comes
Yeah.
up. If
Right.
they're in a wildfire zone or some kind of
Yep.
natural
Yeah.
disaster. There could be a bunch of other reasons. Tell me a
Correct.
little bit about some of the things that are happening on the seller side when they are
Hmm.
listing their properties. What are the
Yeah.
things that they're bumping into on the insurance?
Yeah, exactly. Just exactly those main points, right? Whether they've taken a loss on the house within the last 5 years, that will come into play when whoever the new buyer is looking at it, right? Because that loss is going to still pull up on that property and it's going to show as a
Mhm.
loss, even though it's not on the new buyers. It's not the new buyer's fault, but the insurance carriers are going to want to know, hey, what happened here? Within this past 5 years, what's been done to remedy that situation, right? So what's happening a lot right now is I have realtors that I work with here in California where once they're able to list a property, they're coming to me right away. They're going, hey, Tom, is this property, are we able to get insurance on this property? So I can give a little handout to whoever the buyer is going to be showing, hey, Tom's office might be able to help you out here because we've kind of researched it already. This is not in a wildfire area. Roughly, this is the rough estimate to replace, to rebuild, cost and everything like that. So we're kind of jumping ahead of it. So then, if you have a 30-day close, 45-day close or anything like that, where you can show it to the buyers and go, hey, we have something here in hand that we will be able to get insurance policies on it. Or it could be vice versa. It could be, hey, this property is going to be, it's going to have to go fair plan because you're sitting in brush. There's no way around it, right? And then we'll at least let them know ahead of time because then they could work all that into their closing costs. And then hopefully that'll help the transition go through a little bit smoother.
That is, and that's something that I've been seeing a lot of is sellers are
Right.
now getting ahead of the
Right.
insurance
Mhm.
issue for
Yep.
buyers. So they
Correct.
know
Correct.
that their
Yes.
property is insurable. They double
Right.
check with, what
Yep.
a potential buyer could get. And they
Right.
also potentially
Yeah.
ask if the buyer can come and do the research on their own on
Of course.
insurability.
Mm-hmm.
Yeah.
Yep. Yeah. It's just trying to get ahead of everything, just so then
Mhm.
there's no surprises at the end, right? And then
Mhm.
because in the past you would wait till the last minute just to, hey, I need insurance on this
Exactly.
house because I'm buying it, and I need it tomorrow, and it's great, all right? But unfortunately now it's everything kind of has to flow through underwriting, and so the turnaround time for a quote, it's no longer, hey, the same day. It's 7 days from now. It could be
Right.
2 weeks from now. It's really, I mean, the carriers that are still available, they're so flooded with so much new policies that the underwriting is not fast enough to kind of go through all these quotes that they're getting. So we've seen it 7 days. We've seen 2 weeks. Fair Plan's taken a month sometimes with us to get back quotes. So it really ranges.
Got it. Okay, so that's good on the turnaround times because I do remember
Yeah.
even a year ago,
Yeah.
we would be able to
Yeah.
call you like a couple days
Mhm.
before close of escrow and be
Yeah.
like, "Hey, oh crap, we forgot
Yeah.
like our insurance. Like, can we get a quote on this and
Yeah.
add it?" But no more.
Yeah,
It's
yeah,
like
yeah.
day one of escrow. It's
No
like
more.
we've got to get that
Yeah.
homeowners insurance
Yeah,
policy.
yeah. This is like the first thing now, right? Yeah. If you put a bid in for a property, it's like first thing, jump to insurance and see if you can get an insurance quote on that property that you're looking at purchasing.
Do you ever see sellers offering an incentive for buyers that they help with insurance or cover or something like that? Is
Yeah,
that
a lot of
happening?
it has. I mean, because now the sellers, the buyers, whoever's coming to me because they're purchasing a new home, they'll come to me and go, hey, the sellers said that, hey, they replaced the roof, they cut off all these branches, so they know what insurance
They're
companies are
making
looking
the
for, right?
case.
They're like, we cut off these branches so it's not overhanging the house anymore. We changed the roof, we fixed the plumbing, so the buyers are a little bit more aware of their property now because they're getting all this information from the seller, and so that's great, right? So for us, that's always a plus because we could put all that information into the system, and that always helps, so that's always a plus on our end, for stuff like that. Yeah.
Got it. Okay.
Yeah.
And so sellers obviously have to be a little more involved on the insurance side with buyers than they have been before. And so tell me a little bit, and so they could potentially offer incentives towards their insurance or something like that. Kind of like home warranty, where the sellers sometimes will pay for the home warranty. That could be something sellers might consider, to help their buyers, get into the home.
Yeah, of course.
Aside from partnership.
Right.
But buyers, so tell me a little bit about buyers. So what kind of things are you seeing on the buyer side where it's preventing them from getting insurance on properties?
So what's kind of preventing it is sometimes the property that they're purchasing, there might have been a loss on it within the last 5 years, and even though the buyer, it doesn't belong to the buyer, it belongs to the current homeowner because they took a loss within that 5 years. Best thing is get as much information as possible because once there's a loss on that property, it just holds up everything on our end. Then they're going to require pictures of the property. They're going to want to know what happened, what's been remedied, how was it fixed, where some of the receipts of the contractors worked and stuff like that. So, I mean, the more information that they can gather and send to us as the brokers, the quicker the turnaround time is going to be, right? Because we already know the questions that the insurance underwriters are going to ask us. But if we have everything in hand ready when we're submitting the quotes, it'll make it a lot quicker because then we can just send it all over at the same time. Then hopefully that turnaround time is cut shorter, right? Because instead of the underwriters reviewing, coming back with all these questions, they already have everything in hand already. So that's the best thing with the buyers is just find out about the property itself, know what you're getting yourself into, and then if there's any losses, dig into it a little bit and try to find out what happened.
Okay, got it. So some of the things that buyers should be prepared with when they talk to you, first thing, would you say, obviously, address of the property? And I know that I don't know if they've had their own claims on their own property that seems to follow people over.
That does too. Yes, you are right, Becky. Yeah, so that does follow you for 3 years as well too. So here in California, it does for 3 years. So it does follow you. So if you have your own claim, it is going to follow you wherever you go, and that is going to increase your rates as well too.
Okay,
with that, until it falls off.
So what else do they need to be prepared with? Does the NHC report, the environmental report?
Just be prepared that, like we talked about already, turnaround time is not going to be instantaneous, right? It's not going to be within a day or so. It could be anywhere from 5 days to 7 days to 10 days, depending on if there's any claims or not. If it's very clean, if the property's not sitting in a brush or anything like that, realistically, we could get it back in a couple of days. It could be really quick. So it really depends on the property itself. It depends on the buyer and their history of claims and everything like that. But really, all we need is just an address, their name, and then we could pretty much pull up everything on our end, our back end, just to see if there's been any claims or anything like that on them and on that new property that they're purchasing.
So first step is really you contact your realtor. They connect you with somebody amazing like Tom. And then you get the conversation going when you get into escrow, or even before when you're getting ready to get your property accepted.
Yep. Even before, even if hey, I'm going to make an offer on this property, maybe check it out first. Send it to your broker, your insurance agent, and go, hey, is this property even insurable, right? Because sometimes if it's sitting in a brush area and you have to go to fair plan, it might throw your whole closing costs, all your whole balance sheet and everything off, right? Because now premiums might not be just a regular $2,000 a year or $2,500. It could be $8,000 a year. It could be $10,000, right? So it could throw everything off, and that property might not be what you think it might be, in terms of monthly payments and stuff like that.
It reminds me when my husband and I were we had a little ticket for the Tesla when it came out with the, I think the 3 or whatever, and we were so excited. And we're like, oh my gosh, okay. So being an insurance myself, I was like, let's go check out how much it's going to be to insure this. And it killed the deal. It killed it because I was like, that cannot compete with my Corolla. I was like,
I know what you mean. I know exactly what you mean. Yeah. And I have clients like that all the time. They will email me they're like, hey, Tom, this car, you know, how much is this going to cost roughly?
Yeah,
And
yeah,
then
yeah.
compared to this car, and then, you know, then they base their decision on the monthly payments, you know, and it's
Right?
what they're, right? And it's same thing
It's the
with
same thing with
homeowners.
the house.
Yep.
Exactly. It's the
Same,
same thing
same
about the
thing,
house.
right? Yeah,
And I
because,
love the idea of checking it
mhm,
out with
yeah,
you ahead of time before
right,
people make the commitment. It's just like
right.
getting a
Yeah,
pre-approval or
yeah,
anything else. See where the
exactly.
numbers lie.
Exactly. Just see where the numbers lie, right? Because, like I said, I mean, from 2,000 to 10,000, it's a huge difference on a monthly payment, right? I mean, so that could change everything in your
Mhm.
overall, you know, ratios and stuff like that. The way that you guys look at it for home buying.
So it's almost like buyers should be getting not only a pre-approval, but almost a
Yeah.
pre-approval for
Oh,
insurance as
no,
well.
correct, correct. Yeah.
Yeah.
So, I mean, the sooner you look at it, the sooner you know, the better it is. So you have an idea. But keep in mind, California, especially in California right now, insurance carriers are changing drastically. Like almost, I feel like there's some sort of a new change or a new they'll void out a zip code or something on a weekly basis or even on a monthly basis, right?
Mm.
So it's one of those things where yes. Definitely check, but then we'll let you know if anything changes, right? Because sometimes a carrier might just be, you know, they might have insured one zip code way too much, and they're like, hey, we're just gonna freeze on this zip code, and we can't write anything more, right? So
Right.
really, it all depends, you know. And we'll at that time, at that moment, we'll give you, you know, our best opinion on it. But then if it goes any longer than like 30 days or so, then you know, we'll have to look at it again.
What do homeowners, what should they expect their percentage by purchase price should be to account for homeowners insurance? Do you have like kind of a rough idea of what that might
Um,
be?
so I can kind of tell you replacement cost wise, percentage wise, I'm not 100% sure, but
Okay.
if you're looking at replacement cost wise, right, the more that we speak with our carriers, if you're here in San Diego County, you want to be at about $350 per square foot. So depending on
Okay.
what how big your home is, you know, you multiply that by $350, and that's your rough replacement cost.
Hmm.
What I would advise right now is just go with a higher deductible, 2,500,
Hmm.
5,000. I have a $10,000 deductible on my house. I know
Hmm.
where I'm sitting at right now in my house up in San Marcos. I'm in a brush area. If I lose my current carrier, I'm gonna have to go to Fair Plan, and I'll be paying triple, quadruple the amount that I'm paying for right now. So I'm never gonna file a claim, or very rarely am I, you know, unless something major happens to my property. That you know, I look at the higher deductibles, pay a lower cost on the premiums itself. So I would always recommend that. But right now in San Diego County, you want to be about $350 per square foot. LA County, about $400, and as you work your way up north to like say San Francisco, it's about $450 to $500 per square foot up in that San
Hmm.
Francisco, San Jose area. So that's kind of what the carriers are telling us right now, and that's what the models are showing. Where anytime that we put properties into our system, that's how much the replacement costs are coming back, and then you
Hmm.
kind of judge that premiums are going anywhere from for a single family home. You're looking at about 2,500 to about 4,000, depending on the size of the house, depending
Hmm.
on that replacement cost and stuff like that.
Got it. Okay, great.
Okay.
Well, thank you so much. I super
Yeah.
appreciate it. We could talk about this forever, and I hope that we have an opportunity to chat again
Anytime.
as things are going to change and we know that
Yes.
the
Oh yeah, yeah,
environment is
for
still
sure.
in a state of flux. But
Yeah.
it's awesome that we have somebody like you that's keeping an eye on it. And
Yes.
we'll continue to partner along the way and let us know
Yes.
as things change.
We'll do. We'll do. Anytime, Becky. Anytime.
Okay. Thank
Thank you
you
so
so
much for
much.
having me.
Absolutely. Thank you for being here.
Anytime.
Okay, take care. Bye.
Take care.